So when we were ending class. I mentioned that the 1920s, by the time you get to the end of the 1920s, you really have some cracks showing in the level of prosperity. So the consumer credit and kind of the hands off the economy, all that kind of stuff had caused the economy to grow. And that was certainly true by the time you get to 1925, even going into 1926. But once you start to get to 1926, you start to see that farms who had been encouraged to produce a whole lot of food during World War One, excuse me, that they are starting to struggle to pay back the debts that they had taken on during that period. And so they are starting to overfarm and overproduce. And because the U.S. has become isolationist, we don't have the global markets for American agriculture. So farmers are really starting to struggle during this period. And then you combine that with those natural disasters. So what you start having in 26, 27, and 28 is a series of small crises that begin to pull money out of the economy. So the idea that we had easy credit and people were able to buy a bunch of stuff and that allowed the economy to grow. Well, if people start losing money because their farm's going under, or they're losing money because there was a natural disaster, or the real estate market in Florida has crashed, then people will begin to start to have problems. In addition, Germany starts to have some issues, right? They default in their loans in 1923, and they kind of get tangled up in this borrowing cycle. And so their economy is struggling, and Britain and France is struggling. And those countries are struggling to pay back their loans. So that is, while they haven't totally defaulted yet, that comes later in the 30s. But all of these things are creating some distress, kind of globally speaking. And then the biggest issue is going to be that the stock market is based largely on speculation during this period. There's no Federal Trade Commission making sure people, well, there is a Federal Trade Commission, but they're not actively making people be honest about, there's no Securities and Exchange Commission. That's what I'm trying to say. There's no SEC to make sure people are being totally honest, and the FTC is not really enforcing that. So you have a lot of companies cooking their books, making it look like they're more profitable than they are. And you have lots of insider trading. And so you have these stocks that are overinflated, that people think they're going to be worth a whole lot more. Oh, the stock price is going to keep going up. Well, they think that because they're not being honest on their prospectus and their portfolio. And so people are making these decisions without really without really knowing how healthy a company is. The other part of the problem is you have a practice called buying on margin. Buying on margin is essentially buying a stock with credit. So my stockbroker calls me and says, "Hey, I want to buy stock in this company," and or I call my stockbroker and say, "I want to buy stock in this company." The stockbroker says, "Okay, how much do you want to buy?" And so I give him a down payment for X amount of stocks, but I don't pay the full stock price. So that stockbroker typically has a line of credit at a bank, so he then buys that stock, and then the idea is to flip that stock, right? To flip it and then get more money and then pay off the loan, and then be able to have a little bit of profit for myself. Well, that's all well and good as long as the stock prices continue to go up. But what happens is these stock prices, in part because of buying on margin and kind of trying to get rich quick, and then because you don't have honest stock investing, you end up having this bubble. And so that bubble will eventually burst. And so that's kind of so I have a series of pictures, if it'll ever come up, that shows you a little bit about the Dawes plan and how that works, as well as some of the economic graphs regarding the late 1920s, the Mississippi flood, all that kind of stuff. So by the time you get, Hoover takes over in March of 29, the market booms, it explodes. Everyone's like, oh yes, 4 more years of this kind of Republican control. But by the late summer, by about August of 1929, professional investors are thinking, okay, this isn't going to last. Like the values are too big, and they start gradually selling off. And by September of 1929, you start to have other investors going, wait a minute, there's too much stock coming out here, and people start selling. Well, they start selling rapidly enough so that by October of 1929, the margins are called in. So the people that bought on credit, so that stockbroker um, well, really the bank calls a stockbroker. The stockbroker calls the investor and says, we have to sell now because the price isn't going up and the bank wants their money. Well, what that means is they start dumping a bunch of stock all at once, and then the stock price really plummets. So this is going to cause a major economic crisis. Not so much because you had a gazillion people invested in the stock market. That's one of the misperceptions of the 1920s. There are people playing in the stock market. That is a big deal. I don't want to make it sound like there weren't any, that only a privileged few. You do have more than ever before, but it's still probably only about 10-15% of people with money to invest. The problem is those people are heavily invested, and more problematic is that the banks are heavily invested because numerous banks have made loans to stockbrokers and stock companies in order to finance this buying on margin frenzy. So, part of the issue is when the stock market collapses, it hits the small, like 10-15% really, really hard. And so now you've got another group of people stripped out of the economy. They have trouble participating. And on top of that, you have a series of banks that have overextended themselves. You have some banks that literally took their deposits and invested them in the stock market. And those banks now are suddenly, they've lost all these deposits, right? So it creates a huge problem. And so initially, right after the crash happens in October 29th, 1929, or 28th, or whatever the date is, right after that happens, everyone thinks, okay, well, things will go back to normal, right? People think it's just a hiccup. In fact, Hoover's like, oh, the worst effects will be done in 30 days. But that's not what happens, right? I mean, yes, your average, ordinary, working class American is not affected at all by the stock market. But what will happen is the banks fail to recover, and it's like the last straw in what has been really about 3 years of the economy shedding new money coming into it, right? So the economy is just starting to slow down. And this problem is made worse because you have some of the banks shutting down. You have the economy really starting to slow down. And the Federal Reserve says, oh my gosh, the economy is unstable. We better raise interest rates. And they raise interest rates at the absolute worst time. And the credit system just freezes up. And then that causes even more problems, right? So, and over the 6 months after October 1929, so by the time you get to the spring of 1930, the summer of 1930, what you have are people starting to pull their deposits out of the banks, people starting to get a little bit nervous, and that's going to continue. That's going to cause banks to close, and the more banks that close, the more problems people are going to have. People lose their savings, and in this period, you don't have a Federal Deposit Insurance Corporation. Deposits are not protected. Basically, you put your money in the bank, trusting that the bank is going to be safe, and if the bank goes under, you're kind of out of luck. I mean, sure, you can sue them, but that's assuming you have the resources. And if you're just an ordinary, person, you may not have the resources to do that with. And so it's kind of interesting in that sense. So causes of the Great Depression. So there's multiple ones, even though we typically kind of look at the stock market crash in October of 29 as this is when the Great Depression begins. The reality is it really begins a few years earlier. The crash is just the end of the beginning, if you will, and the beginning of the Depression. So that's or the beginning of the height of the Depression. So that's kind of what we talk about. So you have several different causes. The bank failures are a big part of this, the failure of the Federal Reserve, the farm crisis that's happening, natural disasters, and really all of those things are tangled up with what has become throughout the 1920s as a period of overproduction of agricultural goods to try to make money, agricultural of manufactured goods because hey, this is how we grow the economy, and you had this consumer credit that was meant to fuel all of this, except people run out of credit. People can't borrow anymore. And especially after the Federal Reserve raises rates, that makes it even worse. And then, of course, in 1932, they decide to raise tariffs, thinking that will protect manufacturing, but that just shuts down the economy even more. So by the time you get to 1932, you have an economy with 25% unemployment. You have, pretty much all of that economic growth in the 20s is going to be out, right? It's going to be gone. And so this is what gets us into the Great Depression. And so I just kind of wanted to touch base on that. So the impact of the crash is that it spreads all over the country. You have, this is when we start to go off of the gold standard. We start to reject the idea that we realize we need to have a flexible money supply that can be affected very easily with interest rates. But the American economy freezing up like that is the last strong economy by the time you get to 1930. And so its inability to function begins to have even more profound effects around the globe. And of course, this is one of the factors that leads to the rise of totalitarianism in other places, right? The rise of fascism and that kind of thing. And fascism of the 1930s has an economic component to it. It's about investing kind of an economic populism, if you will. And so you have a lot of that going on. And the U.S. will become even more isolationist in the 1930s. And one of the major aspects is going to be Mexican-American deportations. And I will remember to bring some documents about the Mexican-American deportations of the 1930s, because it's pretty shocking. It's a period of history we don't pay a lot of attention to. But you absolutely have that taking place during the 1930s. And so it very much resonates with kind of what's happened here in the United States in the last couple of years. So lots of negative consequences, and I included some pictures showing you the stock market as well as some images of the Great Depression. And there's, global implications to this, the rise of Japan, the rise of Italy, the rise of Germany, and the general rise of fascism. So that kind of concludes really taking us from the 1920s into the 1930s. And I think probably what I'll do is stop here. And then that way we can look at the 1930s, and I can just look at kind of the period of the New Deal and FDR's response. I think the last thing I'll leave you with is to think about, so women in this process. So here the stock market has crashed. Are women particularly affected by the stock market? Well, women weren't going to be stockbrokers, right? It's the 1920s. Yes, they might work for a stock company or something like that, but they're not going to be actual stockbrokers. If they are, they're kind of really low on the totem pole. So you're not going to have exactly the same kind of impact immediately. But what's going to be felt for women is going to be kind of this long, slow decline. They're going to be the ones that, when they go to get their savings out of the bank, are most affected, when their husband loses their job, or when their clerkship is taken away because the company is shutting its doors. So women are going to be affected in a way that's different than what we think of men. Like the men are going to lose their, anytime, you stereotypically men lose their job and there's this kind of crisis of identity. There's lots of, perceptions of shame about lost jobs and not being able to make any money. But for women, it's a subtle difference. And I think that what you see is that women are going to struggle with that in a very uniquely feminine way. But I also think we're going to benefit from some of the gains that were made in the sense that women had more freedom. You're going to see women, really, continuing to have some degree of social freedom, and all that kind of thing. So, and it's going to vary too somewhat. I mean, one thing about the Great Depression is that, we talk about it being the Great Depression, but the reality is the people that were rich stayed rich. They got out of the stock market early, and so they were less affected. So if you are one of those privileged women, your world is still pretty much the same as it was before. And in fact, maybe it's even more free, right? Now, one of the things that will change, of course, is going to be that women will be more actively engaged with, thanks to Eleanor Roosevelt. She'll definitely set an example for women. So I think in that sense, it'll really kind of continue. But we really see with the stock market crash and the beginning of the Great Depression, the way it impacts women is much smaller. It's much more at home. You have women dealing with desertion. Husbands that don't want to see their wives and kids suffer, or husbands that that give into the despair. So women are dealing with that a lot. You have women really dealing with trying to hold everything together. So in a lot of ways, women have to be exceptionally strong during the Great Depression, in ways that are very subtle. And for African American women, this is going to be particularly true because African American men will be disproportionately affected by unemployment. And so, for a lot of African American families, it's going to be the woman and her ability to get domestic work that will help them keep things together. And even then, of course, that all depends on what community they're in. So, there's all kinds of variations. So, you could really kind of think in terms of the Great Depression as a period of really kind of quiet strength and kind of quiet suffering on the part of women, trying to make things work. But again, it's going to vary a little bit if you're one of those Mexican American women facing deportation. That's pretty dramatic. So all of those things are very much true as we get ready to look at kind of the New Deal and how the New Deal specifically impacts that. But you do want to keep in mind that women were struggling along with men, but again had some differences in how they approach that.